Hops and Stocks podcast is presented by 100 Spoke Media Group. We encourage our listeners to drink responsibly. Please note, we are not financial advisors. We do not offer or provide financial advice.
I'm Spoke affiliated from the city.
Welcome back to the Hops and Stocks podcast. I would say the Valentine's edition, but I don't think anybody on this pod is celebrating Valentine's Day today. All right, I won't sully. I won't get nobody in trouble.
Yeah, man. Happy Valentine's Day to the.
Valentine's Day.
Hold on. Let me do my thing. Happy Valentine's Day to the ladies out there. You know, we are a female-friendly podcast. You know what I'm talking about?
Oh man, this dude is pandering. But this is actually it is a special edition. We got our guy AC Brown from the John L Group. He's our first returning guest, and he's also one of our original guests. I believe AC was on like
episode 3.
Episode 3, yeah. So you know what I'm saying. Glad to have his brother back. AC is an accountant, and AC is a host of other things that I'm gonna let him dive into, because I can't remember everything. I told him before we kicked off recording that.
Yeah, what'd you describe him as?
Like it's just AC greatness, man. Like you know, you want to know who he is. He said don't Google him because he's associated with someone who isn't him that sullies his name. But once again, AC's a good brother, and he's gonna come to us today and talk about taxes. Real important conversation, because obviously it's tax time. So we want to get his brother an opportunity to talk about taxes. I'm sure he has a wealth of knowledge and a host of information to deliver. But like we always do about this time, we're gonna hop into a couple beer reviews. We ain't got my man with the what's in this can, which he's MIA, so we're not gonna start kicking off with B-Dub. We're gonna shoot it over to Blast. What you sipping on tonight, brother?
All right. I got one I'm excited about. Sonder Brewing, one of our mainstays out of Mason, Ohio. Tonight I got the Mango Frosted Milkshake IPA.
It just sounds fire.
Yeah, I'm trying to see. Is there some stats? Okay, we got a 7.2 ALC by volume. Not much to the can. The typical Sonder all white label. Got a little picture of a mango on it. Sorry, I can't get that good for you guys, but nice color, a little bit of a hazy look. I think that's typical with the milkshake IPA. You get a little bit of a hazy color.
Looks fire.
Yeah, nose is pretty good. Definitely getting that that citrus IPA effect. Let's see if they nail that mango note.
Looking like orange juice.
Yeah, it's pretty good, man. Okay, yeah, I'm tasting it. I was making sure. At first it was like, I think they did a pretty good job with this one. I had for the Super Bowl last night, I had the pumpkin with graham cracker milkshake IPA. So a little bit of the flavors is running together to me, based on what I had last night. But I think I would give this a 4. It's an enjoyable IPA, a little sweetness, a little bit of body to it. So I give it a 4.
Is it really cold?
Yeah, really cold.
Okay. I was about to say, that looked like something that you want to be frosty with, man.
Yeah, I mean, it said frosted on the can too, frosted milkshake IPA. So it's pretty good. Definitely enjoyable beverage any time of year, really. So.
Gotcha. All right. I'm going to take over from here. I went to the back of my cabinet. I'm in the process of moving and putting stuff in storage. So like literally I've packed up 10 boxes of beer and alcohol. So my refrigerator is pitiful right now. At last count, I got 12 brews in there, man. Like it looks, yeah, I'm almost about to start a GoFundMe. You know what I'm saying? But this is in the back of my refrigerator, actually. Southern Grist, local to Nashville. This is called Pity Pieces. And so it's a stout brewed with candy shell coated peanut butter candies. I can only assume that to be Reese's Pieces based upon the can and how it looks. checking in at 8.9% ABV. So it got a little punch to it. Once again, typical stout color, dark, can't see through it.
Look good.
Give it a quick sip. It's good. You're not getting most of the people on our podcast are used to like the peanut butter stout from UA. This doesn't mimic that.
Okay.
You're only getting like a hint of peanut butter, some chocolate. It's really drinkable. It's not as heavy as most stouts that like it don't have that.
It didn't look heavy.
Yeah, it don't have that feel. It's coming across like a grown-up porter. It's like a grown-up porter because it's if porter and stout had a baby, it would be this. It's not bad. I like it. It's just it doesn't deliver that. For fear of ending up as a snippet on the podcast.
Nothing wrong with that. You got to give us something anyway.
I've never ended up a snippet on the podcast, and I'm gonna keep it that way. So fear of describing how this feels in my mouth.
Oh well. Well, I mean, if you weren't one before today. I mean, even AC shook his head like.
Nah, man, this is a grown-up porter. That's exactly what it is, man. It's a grown-up porter, baby stout. I'm gonna go along the same lines as Blast. I'm gonna give it a 4. Not bad, not overly excited about it. Something that is very drinkable. What you over there laughing at, man?
Can you describe the mouthfeel?
I'm not describing the mouthfeel. What we are going to do is we're going to mosey right along and kick it up into my guy AC. I talked to AC on the phone earlier, and he was like, "Man, all right, I got my brew. I'm ready for my review." I was like, "Dig, AC, I actually was going to tell the fellas, let's go ahead and just skip the beer reviews and hop into the taxes." And he was like, "Nah, man." He was like, "I got to get my beer review in."
Yeah, man, you can't come on the hops and stocks and only do stocks. You know what I'm saying?
Yeah, and not do it, right?
Yeah, you gotta have the hops, man.
So once again, AC Brown from the John L Group, man. What you sipping on, brother?
All right, so it's really simple. I'm gonna keep it southern. It's a Kentucky coffee barrel stout. It's a stout. It's brewed with Haitian coffee. It's aged in old oak bourbon barrels, and it's served over whole coffee beans. So it's got a 8.0 alcohol. It's made and distilled, bottled, and distributed in Lexington, Kentucky, where all quality bourbon is made in Kentucky. So I did take a sip. I'm gonna take another one because I think I need to confirm that what I tasted the first time is actually what I tasted the second time.
Okay,
dig it. I don't know why I didn't know that they was in Lexington.
Well, yeah, Kentucky.
Yeah, I mean, I knew the beer name, but I was like, I didn't realize that they were out of Lexington though.
Yeah,
I mean, for the most part.
Yep, I can. I'm a stout guy, especially not stout in stature, but I like stouts. I can definitely taste the wood flavor of the barrel. I taste the coffee beans. The coffee is not overpowering. It's not overbearing on the stout itself. It's definitely a thicker stout. And I can taste the oak in the bourbon barrel. So it's got a nice blend. On a scale of 1 to 10, I would probably give it a 6. I mean, it's enjoyable. I could probably drink, the Kentucky is where it's at anyway. I mean, I'm a bourbon guy, so this is actually pretty pleasurable for me. So, but yeah, if I'm sitting back at home, kicking up, watching a game of basketball, football, whatever, I can enjoy this.
Got you.
It's been too long since you've been on the show, AC, man. Our grading scale is out of 5 mugs, man. So you got to translate.
Oh, 5 mugs. Okay, so I'm gonna translate that.
that.
I'm gonna translate the 6 to a 3.
That's what I thought too. That's what I thought.
Yeah, I was about to say I'm gonna translate that to a 3.
Yeah.
Yeah.
I'll translate it to a 3 because it's better than, it's not a 2.5,
Mhm.
but it's not a 4.
Got you.
So I'm gonna say a 3.
All right.
When you start talking about, you was like, I'm not a stout guy. I was about to give out your IG and be like, hey man, y'all go check out AC, man. Dude been on the weights. he getting ready for this. I hit him up the other day, was like, because it was like 6 weeks out. I'm like, bro, you competing? Because he back all flexed out, got the V on. I'm like, bro, don't put on some weight, man.
Yeah, no. So just to kind of keep it light, I turned 40 in March, and
okay.
one of my goals was to do a photo shoot. Like, this is 40. I needed to document this. So when I'm 80, 90 years old and I'm talking to my great grandkids, I can say, oh no, I looked like that before. I used to look like this.
Okay.
Before I got older. And so, it's a personal goal of mine. I'm not, interested in modeling or anything like that. It's just, at the end of the day, I'm training, trying to get, better health. It's fitness is a lifestyle. And so that's what I'm doing. The style is probably not helping my cause, but I'll just work it off in the gym.
Facts.
So we done bought on the fitness model for Valentine's Day.
Hey, you know what I'm saying? Ladies, come close and listen. In 2023, the Hops and Stocks podcast will be releasing an exclusive AC to CPA calendar.
I thought you was about to say a Hops and Stocks calendar. I'm like, damn, I'm gonna have to hit the weights then.
Yeah, that's what it's really gonna be. It's gonna be a Hops and Stocks calendar.
He gonna be in the fireman suit.
But man, once again, man, we're glad to have you here, man. And I'm gonna let you, you know what I'm saying, talk about yourself, introduce yourself to the people, and then let's hop into these taxes, man.
Yeah, absolutely. No, thank you all again for the invitation. Eric, you hit me up. Eric's my guy. And he hit me up saying, hey, let's do something. And I was like, of course I'm gonna come back. I mean, you guys are doing some positive things. I mean, to know that I was on the third episode, and now we're on 28. Like, that's a feat right there. That's a tremendous feat. So kudos to everything that you guys are doing. I do follow you guys on IG, and I follow your podcast. So some of the guests that you've had on, you guys just nail it every time with the guests and the conversations and everything. So I appreciated the invitation back, and to find out I'm the first one that you guys invited back, that kind of puts a feather in my cap as well. But to everyone, I'm AC Brown. I go by AC the CPA on IG. I'm a licensed certified public accountant out of Michigan. I've recently been appointed by the Governor Whitmore to serve as a board member for the Michigan Board of Accountants. So it's a review committee sponsored by the state to just kind of help the regulatory authority make determinations on reviews for licenses by CPA. So it's a great honor to have that appointment. I take it seriously. So I'm just here really to serve. In addition to that, we had a really good partnership, developed a really good partnership with the Detroit Free Press. So we've been doing articles, helping to publish articles in the Detroit Free Press, talking about this very thing. What's new in 2022 as we kicked off the filing episode, not the episode, but the filing season that started on January 24th. we're like 2 or 3 weeks in. We're 3 weeks into the filing season now. And just so you all know, there's been a lot of confusion this year, and I'm going to get into it a little later on in the presentation as we start talking about it. But I've been fielding calls, been writing articles about some of the things that are happening this season. So I really want to get involved and get going into it. And if you guys are ready, I can rock and roll.
Yeah, I'm ready, man.
Let's welcome Mr. 30 minutes after what's in this can man segment has passed.
What? I thought we started at 7:30.
I said 7. We sent an invitation that said 7. We sent you a text message 30 minutes ago that said 7.
Oh man, my bus, man. I didn't know.
I'm like, man, this dude must be taking a nap.
Did y'all already record it?
Man.
Yeah, we poured up.
Yeah, we're going to catch you on the back end.
No, I'm talking about, did y'all finish the podcast?
No.
We about to AC about to get into his thing.
Oh, I didn't have no beer review, no way. I wasn't gonna pull up.
Oh, okay, we good. All right, back to regularly scheduled programming.
All right, AC, I got a question for you, because my dad hit me up, I don't know, maybe 5:30 this evening. And it's funny, my dad taught me everything I know about taxes, because, you know, he would always do his own. And now, you know, I do my own, which, you know, ain't no big deal or whatever. But it's weird that he hits me up with his tax questions now. And I'm like, man, why are you calling me? I learned everything I know from you. And he was like, nah, you the man now. But anyway, he was hitting me up, you know, just a little confused about the stimulus payments.
Yeah.
So I wonder if you could, you know, kind of touch on that for our listeners, just kind of what they should be looking for, and how the stimulus payments affect what people are going to do with their taxes this year.
Yeah, no, that's a good question. And I mean, we just gonna hop right into it, right? So
yeah, let's get in it.
So that is actually one of the hottest topics going around, because people would have received the ARPA, the American Recovery, the American Rescue Act, ARPA. Under that congressional law, Congress approved a third stimulus. And the third stimulus was a stimulus up to $1,400 per individual that was filed on your 2020 tax return, right? Okay. So there were some income limitations. If you were single and you made less than $75,000, you could receive a stimulus payment of $1,400, and then it phased out as your income increased. If you were married filing joint, you received, and your income was less than $150,000, then you received $1,400 or $2,800 for each individual, $1,400 for each individual. Not only did you receive $1,400 for yourself, but if you had any dependents that were on your tax return, you got $1,400 per dependent as well. So a family of 4 who with the taxpayer, the spouse, and 2 children, 2 dependents, you would have gotten $1,400 per person. So that was a $5,600 stimulus payment. Okay, so that's also the stimulus payment is called kind of officially, the name of it is an economic impact payment. Okay, so it's an EIP, and the IRS started issuing the letter 6475 in January, towards the end of January, early February. So the IRS has issued all of those letters. So you're going to need that letter when you file your tax return, because you're going to have to report that economic impact payment on your 2021 tax return. So if you don't report it, most of your tax preparation software will prompt you
to put it in.
to put that number in. They won't
Yeah.
even allow you to file unless you put something in that field, even if it's zero. And another thing, so let's say you didn't get the impact payment, but you qualified for it. If you didn't get it, but you yet qualify for it, it'll be reported on your 2021 tax return as a recovery rebate credit. It's a refundable credit. So in order to have qualified for the stimulus payment, the early stimulus payment, you would have had to file your 2020 tax return. That was mandatory. You weren't going to get a stimulus payment unless you filed your 2020 tax return, or you were not required to file a tax return. So these are for people who are on fixed income who won't meet the income requirements. You didn't have to file if you're on Social Security, Medicare, excuse me. So if you were on that and you weren't required to file, the IRS just piggybacked off of that what Social Security Administration had, and they still issued you a payment. So in most situations, that stimulus payment is not taxable. So you're not going to be taxed on that, and you don't have to pay it back. That was one of the biggest questions that people had about even the first two economic impact payments that you received in 2020 and then early 2021 was, well, if I accept this payment, do I got to pay it back? The answer is no. It was a advanced payment for a credit that you would have gotten had you when you filed your 2021 tax return. So just to let you know, just to kind of wrap it up and cover that, yes, you will have received, if you received a stimulus payment, you would have gotten a letter 6475, and that will tell you how much you received. If you didn't get the letter, you can still access that through the IRS website. The IRS website is www.irs.gov, www.irs.gov. Okay, it's not .com, it's not .edu, it's www.irs.g as in great, O as in Oscar, V as in Victor.
Man, them dudes don't pay no bills this way. You done said their name 3 times on our page, man.
I said great the first time.
They ain't pay for their advertising on this pod. Nah, but that's why my dad called me. He had got that letter in the mail, and that triggered him to reach out to me.
Right. Yeah, you're gonna need that letter to file. So
you include that in your packet when you send everything in?
Yes, you're going. So what's going to happen is if you are using a paid tax preparer, or you're using a third-party tax preparer, that tax preparer is going to need that letter. Okay. If you're preparing your own tax return, there should be, depending on what type of software you're using, whether you're using TurboTax or whatever software you're using, you're going to have to put that information into the system. It's going to ask you how much did you receive in your economic impact payment. So it will not ask you about your stimulus. It's going to ask you about the economic impact payment. So I know we got a lot of colloquials for it. Stimulus, give me my check, like run me my stimmy, like we got a lot of colloquials for it, but the actual term
that's good. That's
economic
good
impact payment.
Yeah, that's good
EIP.
Yeah, EIP.
And how do you break that down? E as in, no, I'm just kidding.
E as in Edgar, I as in Ivan, P as in Peter. EIP,
There you go.
not IPA. EIP.
Hey, all them letters sound the same after a couple IPAs.
Right after a couple of them, they all start sounding the same. Yeah. So
I need an IPA right now.
but that's the economic impact payment, right? But the real issue that's going on, in addition to the stimulus, is what the heck do we do with this advanced child tax credit?
Okay.
That's one of the biggest issues that's going on with tax preparation, because people would have started receiving the advanced child tax credit probably around July. And it was based off of your 2020 tax return, unless you registered online with the IRS children that you were going to claim the credit for. Okay. What was different about this credit, this advanced payment, is that you got a payment for children, dependents that you claim on your tax return up to the age of 17. The child tax credit used to be only up to 16, but for 2021 only. 2021 only, for the purposes of the child tax credit and advanced payments, Congress extended that to basically high school age dependents. So up to 17. You would have gotten advanced payments for 6 months, typically. The IRS issued a letter, the letter 6419. It's the 6419. The IRS would have issued a letter. You would have got it in the mail. It's going to tell you how much in advance payments you received and for how many dependents you received it for. Okay, so that letter is going to be important because you're going to have to reconcile that as well and report that on your tax return. Here's the tricky part. If you're married and you filed jointly and you claimed the advance, both the taxpayer and the spouse is going to receive the letter 6419. And it's going to be for half of the credit. So case in point, if you are married, you file jointly, and you have 2 children that qualify for the child tax credit, full value, $1,000, or excuse me, $1,500 per child. That's what you would have got paid out. So you would have got paid out $3,000 over a 6-month period. So you would have gotten about $500 a month. Okay, $6,000. The IRS would have sent the taxpayer a 6419 for $1,500, and the spouse would have gotten a letter 6419 for $1,500. When you go to file your taxes, you're going to need to combine both of those letters to get your true amount. And it confused me a little bit because when I got my letter, I was like, oh, this is only for half. Like, I know I got more than this. And then the letter came with my wife's name on it. She opened the letter and she said, well, you've got, what is this? And it was the other half of the child credit that we received. So when you go to file your taxes, if you're married filing joint, you're going to need both letters. You're going to get 2 letters. As a household, you're going to get 2 letters. If you're single or you're filing head of household, you're going to get 1 letter. Here's the confusion though, because this advance payment is subject for repayment. Like if you got the credit that you weren't supposed to get, you're going to have to pay that back. So this credit is one of those payback situations if you didn't qualify for the payment. So I worked on an article with Susan Tompour and with the Free Press, and this is the scenario that we're finding. And I have a couple of clients that were in this situation. So let's say you're divorced and or you have a child support or child custody swap, to where every other year one person claims a child, and then you swap each year from claiming the child. So the advance payment was based off of the 2020 tax return. So one parent who claimed a child in 2020 got the child tax credit. But for 2021, it's now the other parent's time to claim, right? Well, if the person who claimed the child in 2020 doesn't claim the child in 2021, that person, that parent, has to repay that money.
Dang.
Crazy.
Yeah.
Yeah.
And
Yeah.
the only guidance that we've gotten from the IRS is, well, they shouldn't have received the advance payments because they weren't legally going to file the child for 2021.
So my kids are adults, so none of this really applies to me, but I am curious, is this advance payment, and I'm gonna use a word that came up in our text chat this week, in lieu of the EIC?
Hey, I gotta talk about that, man.
So no, the short answer is no. It's not.
Okay.
It's not in lieu of the EIC. It's not a substitute of the EIC. It's not the earned income credit. The earned income tax credit is separate from the advanced child tax credit that many Americans receive for claiming their children, claiming their dependent. So, and I also want to make mention, like, the child tax credit doesn't just isn't just for dependents. When I say your child, like if you are taking care of a minor child who may be your nephew, there's a relative test, there's a domicile test or residency test, and then there's a support test. So if you are raising your nieces or your nephews, or you have foster children or adopted children that fit the criteria, meet the age test, meaning they were 17 years or younger, if they lived in your house for more than 6 months out of the year and you provided more than 50% of their care, and they're related to you in some way, shape, or form, you can claim that child tax credit. So it's not just for your biological children, it's for any dependent that fit those criteria of a child in the case of a child tax credit, and you can file it. So there's a lot of things going on, a lot of confusion going on with this, but the most important thing that you have to have when you're filing this tax return this season is you're going to need your letter 6419, which is the advanced child tax payment letter, and you're going to need your 6475, which is the EIP or the economic impact payment letter. Both of those letters you're going to need for this filing season.
Have you run into a situation where someone's spouse has opened the 6419 and found out about some outside kids?
Fortunately not. I have not.
When you was talking about that situation, I was just like, man, it sounded like it could be bad if you file and claim some kids that your spouse don't know about or whatever, and you get that letter.
Well, hopefully the spouse was there to sign the tax return, and you didn't sign it for her or him. You go ahead.
What are your so I know you brought up, the IRS is pretty much saying like, well, you shouldn't have claimed the kids or whatever, but what is your recourse or what is your suggestion as a CPA to your clients who are stuck in that situation where, they got 3,000, they may not have the capability or ability to pay it back? Is it to be nice to the other spouse and say, hey, let me claim the kid this year so we can figure this out? Or
Yeah, in many cases, well, I'll say in the case of one of my clients that actually called me, it was my client's year to claim the dependent. And he asked me, hey, I was talking with the child's mother, and literally, what should I do? I don't want to, he was on the opposite end of the spectrum. They're actually trying to co-parent and trying to work this thing out. And I said, well, if there's an opportunity for you to collaborate and work it out to where the child is claimed on her tax return, it'll be much cleaner. And maybe you work it out to where you claim the child for the next 2 years.
Yeah, 2 years in a row or something like that.
Yeah, 2 years in a row. So that the parent isn't in the bind. Now, I'm not, if you ask me personally, I'm going to say, hey, let's see if we can work something out.
right.
Other people may have different positions, and they like, screw that, it's my year to claim. I'm going to claim, and then let them.
I think that's 95% of people is going to do
that.
Need my 1,500, dog.
Yeah, I need all that. I need the whole gamut. But the child tax credit, just so we understand what the child tax credit is, the child tax credit increased in 2021 from $2,000 per child to $3,000 per child. And if the child was under the age of 5, you got $3,600. So you got an extra $600 for children that's under the age of 5. The advanced child tax credit was only for half of the actual credit. So you're talking in many cases $3,000 per child or $3,600. That could swing the pendulum, and that's a refundable tax credit. You're going to get that money refunded if you don't have a tax liability. You'll get that back. So it's checks involved.
I see the look in your eyes. You wish you
I'm over here plotting on who want to have my baby, man. Like, 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 you know what I mean? Like,
this cat look like he ready to change some diapers.
Man, AC seen my taxes. I don't never get a refund, man.
Brother, I'm gonna tell you, that tax credit ain't worth it. You're gonna spend 10, 15 times more than that.
Man, yeah. That might not even be diaper money.
Yeah. The way these prices are, and
a couple packs of Huggies and that money gone.
Yeah. That money spent on prenatal vitamins.
Man, yeah.
The child ain't even born yet.
Similac.
Yeah, so I mean, but that's a huge topic. And then if I can transition to the other topic that you kind of brought up is the earned income tax credit. That's a separate credit, so that's a refundable credit as well. And I tell people the earned income credit acts as a bell curve. So as your income increases, the earned income credit is based off of money that you earn. So money that you earn is typically your W-2 wages if you work a job. If you are an independent contractor or a gig worker, you can claim that as business income or income period that you earned. It also includes W-2 wages, 1099 wages. If you were invested in the business and you actively participated in the business, you can claim that as earned income, right? So they take the earned income and they apply it to this calculation. It's act as a bell curve. So, it goes up, then it peaks, and then as your income rises, it starts to decrease. So if you don't have, this is the type of credit where you can claim this credit and receive this refundable credit, even if you don't have qualifying dependents. So if you're single, no dependents, you can claim this credit if you meet certain income thresholds. I tell people that the earned income credit is a supplemental income credit. That means it's designed, the spirit of it is designed to help lower income individuals supplement their income. Okay, so the maximum credit for 2021, if you're single with no qualifying dependent or relative, that maximum credit is $1,500, $1,502. If you have one qualifying child, the credit is $3,618. If you have two qualifying children, it's $5,980. And if you have three or more qualifying children, that tax credit is $6,728.
Better stop talking about more kids for Eric. He good.
Hey,
I see the look in his eyes, man.
I'm over here doing the math, but he just said that's income based, man. That's where I get.
I never get earned income
It
credit.
is income based. If you are, so it caps, if you have three or more children, it caps out at $45,000. So if you make $45,000 or less, and you have more than, if you have three or more qualifying dependents, then you could receive the maximum credit of $6,728. I always ask people who ask me this, I like, you know, do you want to make more money, or do you want the earned income credit? Do you want to qualify for the earned income credit, or do you want to earn more money? Because, you know, we run a fine line here, right?
That's a good way. That's a good way of looking at it, because I always get pissed at that part. I'm like, man, why are they taking me through this? I know I'm not gonna get it, but right. I guess you gotta look at both sides of the coin, man.
Yeah. Well, so just to add a little bit of complexity to this, and Eric, we kind of talked about this a little earlier. Will, we talked about this a little earlier. So under the CARES Act, last year, individuals, it was a lot of, in 2020, there was a lot of people on unemployment, right? I mean, the economy went down, people weren't working, unemployment hit, and the IRS, because unemployment does not count in your earned income credit calculation, can't use earned income credit as earned income. So for many people, unemployment was all that they received for a good part of the year, or some people all part of the year. So they wouldn't have qualified for the earned income credit in that year. So what Congress did under the CARES Act, they said, well, you can go back and use your 2019 earned income to calculate the earned income credit only. So only for earned income credit calculation can you use your 2019 earned income. That holds true for 2021 as well. If you qualify for the earned income credit, but you spent still 2021 on unemployment, or you had less earned income in 2021 than you did in 2019, you can use your 2019 earned income to see if you qualify for the earned income credit in 2021. So that's another wrinkle in the whole earned income credit, whole tax situation. So it's causing a lot of confusion. I'm telling you right now, like, I'm scratching my head. I'm having to ask questions now that I normally wouldn't ask. I would just use the tax documents that I have, prepare the tax return. Now I've got to make sure that my clients have their letter 6419, have their letter 6475. If you qualify to earn income credit, did you have unemployment, right? If you did, I need that. And one of the other things that you have to do as an individual is you have to do your own reconciliation as well, because another issue that's coming up is people, the IRS is getting that letter, the IRS is sending that letter, and people are saying, well, I didn't even get that much. So now you're going back through your bank statements to verify what's on that letter. So there's some responsibility on behalf of the taxpayer to keep the IRS honest. Like, this is what you said I got, but this is what I actually got in my bank account. So that's another wrinkle in my head and a wrinkle in my brain. I'm like, I got to ask all of these questions and get my clients prepared before they come see me, before they upload their tax return or their tax documents. I'm sending out organizers saying, please make sure you have this letter. Please make sure you provide me everything, because if you don't, it will unequivocally delay your refund. If you don't reconcile those letters, the whole point of this is if you don't reconcile that, if it's not on the tax return, the IRS will emphatically delay your refund. And the delays in refunds, I have clients who are still waiting for their 2020 tax refund.
What?
And we're a year later.
Damn.
Yeah, go ahead.
Okay. What I was gonna say is, I'm assuming most people are probably like me. Like, I've never used a CPA up until last year. My entire corporate America life or whatever, since I've been working, I've always filed just using some standard, software to do it, or even the free softwares that some counties, cities, and states offer. And the reason why I used the CPA last year is because I started a business. Is the information that you're giving us today related to these different changes, is your standard software giving that to people, or are they missing some of this stuff because they haven't gone out and hired somebody to do their taxes?
So I used to work for a tax software company. I actually developed tax software for a major company for a few years. And so as a software developer, right, you want to make sure you have information and updates and different queries that would prompt the user to think about these certain things. Like one question would be, did you receive an economic impact payment? Well, if I don't know what an economic impact payment is, if I called it a stimulus, but the software company didn't call it a stimulus, I may or may not know what that is. And so I'm confused. And then I have to go Google it or look it up at the IRS website. All I'm saying is, self-preparation is fine. And for the most part, for most situations, you can prepare your own tax return, especially if all you have is a W-2 and, it's not complicated. You may have some dividend income from here or there, but it's not complicated. So it's fine to prepare that tax return by yourself. I tell people when they ask me like, well, why do I need a CPA to prepare my tax return? I say, you don't need me to prepare your tax return. You pay me for the information and the knowledge that I have, that I've already done the research, so you don't have to. And then anything that I sign, I take responsibility for. So if I sign a tax return, you're paying me to take part of the responsibility of that tax return, instead of it all being on you. If you get a letter from the IRS about a tax return that you prepared, you're the only one that's going to be able to answer to the IRS. Or you're going to hire me because you may or may not understand what the IRS is asking. And it may have been prevented had you sought professional, help in preparing that. So, for the most part, I mean, the tax software companies have gotten, very sophisticated and intuitive, to say the least, in their software. So you'll get those alerts, you'll get those prompts in a solid self-preparing tax software. But in many cases, I tell people, you don't pay me to prepare your tax return only. You're paying me to take responsibility as well.
Well, he likes you, so when he does that funny math, you can get him out of trouble.
Hey, All I'm saying is I have never gotten a return. So
A refund, you mean?
yeah, I've never gotten a refund, man. Like, and I'm not saying like I make all the money in the world. I feel like I should have something refunded to me, man. But it is what it is. So, and I know people that like I've had, people who, have worked in corporate America a long time, have made money for a long time, and, use CPAs, and they always got these little slick things that they talking about. And I'm like, man, I ain't gonna lie. I want to know what that is. Like, I want to know.
Yeah.
Like,
Yeah.
even last year when AC did my taxes, we talked about a couple things, and we talked about what was in my best interest, long term. It was like short term. Do I want to take this money now, or do I want to wait where I can, write more stuff off in this coming year? And like he guided me through the process, because I was like, you mean I owe what? And I was like, man, I didn't want to pay that. I ain't gonna lie. And he was like, man, trust me. He was like, it's to your benefit. Do this now, and we'll do this later, and it'll all work out in the end. So
yeah, I mean, you hire a CPA, or you hire a CPA to assist you with tax strategy and tax planning that you may not know individually. Because I mean, unless you're studying tax law by yourself, just off the blue, you're just reading tax law and you're reading the latest updates. How do you trust everybody on YouTube? Like, there's no way for you to vet a lot of this stuff. And there's a lot of people with a lot of interesting things to say about taxes, but everything that's free ain't free.
right.
Like, there's a cost to free, right? As much as we want to say, like, man, I got this great information, like there's a cost to free. If you don't know, everybody's tax return is as unique as their fingerprint. All four of us on this line all have different familial issues. We're different in income levels, income ranges. We're different with our the way we file our taxes. Some of us may be filing married joint. Some people may be filing head of household. Some people are filing single. Some people have one dependent, two dependents. Like, everybody's situation is different. So you can't go to a regular YouTuber or a regular Google site and just get all of the information if you're actually seeking help. It's best that you seek professional help when you're seeking out this information. And a person who is really honest and a person who is honest with you will say, hey, you know what? I think we probably need to have a meeting, because I can't give you advice if I don't know your situation. Like, I really have to know the ins and outs of your situation in order to properly advise you. But yeah, there's various tax strategies that we could implement that you may or may not understand. Like, I had one thing is, one of these topics that's really hip right now. It's been going crazy. It's been around for a minute, but cryptocurrency. What do I do with cryptocurrency? I got it in my investment portfolio. Like, I'm trading and I'm doing all this stuff. I'm trying to earn this money. I'm trying to ride the wave of what I'm selling. I'm doing transactions. And I had a client who invested in the cryptocurrency at the beginning of the year. And had he waited until January, that $36,000 gain that now he has to pay his regular tax rate to, had he sold that a couple of days later, he would have been into long-term capital gains, which is capped at 15% in most situations.
That's what you put me on last year, because I had no clue. I was trying to day trade.
Buying and selling fast.
Yeah, I was pop. I'm over here like I'm
Yeah.
a day trader making money, and you was like, "Hey, yo, stop."
Speaking of that, is there anything as far as like retirement accounts that you can write off on your taxes? Like as far as like IRA, Roth, or traditional IRA, you can write it off of your
Yep.
taxes.
Yep, so a traditional IRA, you can.
Hold on, listen to the whole story, B-Dub, before you start
Okay.
writing shit off. Look, I did not say that. I did not say that, B-Dub.
Yeah, no, so traditional IRA contributions, you can receive a taxable benefit. For that, it's $6,500 for 2021. So you can contribute up to $6,500 to a traditional IRA and claim that as a deduction on your tax return, because contribution to your retirement is a tax avoidance strategy. And I really want to make this clear, because we may have some people are going to listen to this. I'm going to be very clear with you all. Tax avoidance strategies are legal. They're 100% legal. They're based off of tax law. Tax evasion will send you to prison.
Yeah.
All right, say that one more time.
Tax avoidance strategies are legal tax avoidance or tax deferral strategies, meaning we're going to kick the can down the road and pay the taxes on this money at a future time.
Okay.
Typically, we send in retirement and we send it to retirement, we nest egg and we build our retirement so that we can draw off that over the rest of our lives after we retire. Typically, the average American retires at 40 to 50% of the income that they receive when they retire. So if you were making $100,000 a year at the point of retirement, when you retire, your income is going to typically drop down to around 50 or $60,000 a year. Well, you're typically at retirement, you're going to be at a lower tax bracket than where you are today. So in tax retirement and tax deferral, we're going to take that $6,500 while we're in a higher tax bracket today. We're going to avoid that higher tax bracket today, defer it to when we retire and pay the taxes on it at a lower tax bracket. That's why we get the deduction today for our contribution, and then we pay the taxes when we retire and start drawing from that money.
So that money's taxed twice?
No, that money isn't taxed twice. That's why you get the deduction.
So if I'm paying into my IRA and traditional after it's already been taxed, and I'm contributing by myself, it's already been taxed. It's after tax dollars, and then it's getting taxed again later.
That's why you get the tax deduction, because you're paying. You're saying that you own a IRA by yourself. So you're contributing to your 401k that's off at the job, but you have another IRA that you own. No matter if you lose your job or you change your job today, you're still going to own that IRA, right? So you're contributing to that. Well, when you contribute to that, that's a personal IRA. You can contribute up to $6,500 into that IRA and claim $6,500 tax deduction on your taxes. So the money that you put into your IRA is now a tax deduction, and you'll pay taxes on that money
when you withdraw,
when you retire.
Okay. And it works for both traditional and IRA?
So that works for the traditional. The Roth IRA is a different animal. The Roth IRA says, okay, I'm in this tax bracket now. I'm likely to be in a higher tax bracket when I retire. So I'm going to invest this money, I'm going to invest after tax dollars while I'm at this lower tax bracket, because when I retire, I'm likely to be at a higher tax bracket than where I am. So the tax strategy is I pay the taxes early at a lower tax bracket, And then when I go to retire, when I go to collect that money at retirement, that money is non-taxable.
Okay.
Because I've already paid the taxes on it.
'Cause I opened up both of them, but I just opened up my traditional this year, but I've had my Roth since last year. So.
Okay. Yeah. Yeah. I mean, there's a, you know, I don't want anyone to misconstrue. I'm a licensed certified public accountant. I am not a licensed certified financial planner. So I'm not giving you investment strategies. I'm telling you what the tax law says that traditional versus Roth has. There's also other strategies, especially if you own a business. If you own a business and you pay yourself a salary in that business, you can offset some of that tax liability. You can offset that by opening up a simple pension, a self-employment pension plan. We call that a SEP plan, or a simple IRA that is funded by the business. So if you kind of take it into consideration of your current job is participating in an IRA, meaning you pay some, your company matches or pays some, and the company actually gets a business deduction for their payments on your behalf. So they get to write that off as a business expense. So if you own a business, you can open up a SEP or a simple IRA, contribute up to 20% of your salary that you paid. You can contribute up to 20% to your simple IRA or your SEP plan, and that becomes a tax write-off for your business. What you've essentially done is kick the can down the road because you're avoiding self-employment taxes in 2021 to pay income taxes at a lower tax bracket in sometime in 2040 or 2050 when you retire.
Good info right there.
Great info right there.
Yeah. That's why they pay CPAs. This is how I earn my money.
Yeah. One question that I had, and I don't know if it applies to this tax year or next, but there's one, I think it's under this current administration that was introduced as it relates to third-party payments like Venmo, PayPal, CashApp, and everybody just went crazy because I mean, I know me personally, I do a lot of allegedly do transactions. Actually, let me back that all the way up.
I'm probably gonna do any transactions.
I'm probably gonna edit this out.
Yeah, you need an edit. You need an edit right there, brother.
Yeah, I need an edit point at I think we're about an hour in. So hypothetically speaking, if one transacts frequently through Venmo or any other type of third-party app,
like just took it all the way, like
you
should have been like through Sinmo or something. You should have cleaned it all the way up.
Can you briefly speak on the new thing that came out related to those type of apps? Because that was huge.
Yeah, that applies to this current year that we're in. Okay. And what the IRS did was they changed the reporting requirements for these third-party settlement organizations. These are your PayPals, your CashApp, your Venmo, your Zelles, right? So one, if you are using these apps to conduct normal business, so you own a business, but one form of payment that people can pay you by is through PayPal or CashApp or Venmo or Zelle or some of these other, whatever third-party settlement organization you're using. If you are using that for business purposes, it really doesn't affect you. You should be reporting that business income anyway. But the reporting requirements have changed. The IRS now requires these third-party organizations to issue people a form 1099-K. 1099-K as in Kevin. 1099-K. You're going to get that if you have transactions in excess of $600 annually. So if you've collected more than $600 via Cash App or Venmo or these other, whatever have you, these apps, you're going to get a 1099-K. Now, if you're doing this for business purposes, it's not going to matter because you're supposed to report that income anyway. This is where it gets tricky because I'm going to use myself personally. I've got children and my sons, they have Cash App. So I got two sons that are driving. And if they, they may Cash App, they may text me and say, hey, Dad, I'm running low on gas money. Can you Cash App me $50 or $20? $20. So I Cash App them $20. Without getting into the gifting laws, for the most part, most of the gifts that you receive are non-taxable. They're non-taxable events, meaning you can exclude them from your income. You don't even have to report that to the IRS. Gifts are spontaneous. They have no invoices attached to them. It's impulsive almost. It's thoughtful. Here's $20. Okay. If he hits me up for $20 and then hits his mama up for $20 and he does that, over the course of the year, and we're all sending it via Cash App, he's going to get a 1099-K. It's going to be up to the individual to determine whether or not that money that they receive is taxable or not. So gifts, another analogy I often use is, we got pretty savvy on Facebook. It's my birthday. Hey, if you want to be kind, you want to love, show me some love, here's my Cash App. All right. And then some people, Cash App your money. Well, you get $600, $700 for your birthday. These are our birthday gifts. But guess what? You're going to get a 1099-K from Cash App at the end of the year, and you're going to have to determine whether or not that money is taxable. This is why I don't have a problem with people using Cash App to transact business, but there now more than ever, it's going to be very important that you separate your business from your personal. So you should already have, if you're in business, you should already have a separate business bank account. And for business purposes, you have a separate business bank account. You attach Cash App or Zelle or Venmo to that business account, not your personal account. If you have a personal account, then that money should not be going to your business account. You shouldn't be commingling funds. So now more than ever, it's going to be imperative that you separate business and personal. That way, if everything was sent to your personal Cash App, you can legitimately say these were gifts. These weren't for payments. But if you're using you're using the same Cash App name to collect money for cutting hair and gifts, now you're commingling funds and then can get hair. And you're going to have to prove what is taxable and what isn't taxable.
Got you.
That's good advice too.
So overall, it doesn't impact the friend-to-friend transactions that most people are like, hey, we all went out, we spent, the bar tab was 100, y'all just Venmo me y'all part.
Right. It's not going to,
Okay.
It's not going to change. It didn't change the tax law. It just changed the reporting requirements that's on these third-party organizations. So you can still do those types of things and it's still a non-taxable event, but it's going to be up to you as a taxpayer to determine what to do with that 1099-K that you're going to get, because you're going to get a 1099-K. And it's going to be like, well, what do I do with this?
All
Well,
gifts.
it could be
They were all
taxable.
gifts.
One thing about it, it's going to be reported to the IRS. So you're going to have to either exclude it from your income and make sure that you have sufficient documentation to prove that these weren't taxable events, or you're going to include them as your business expense. I mean, as business income.
Is the beer emoji in the Venmo, like, is that enough? I'm thinking like, what kind of evidence do you have to say that, hey, this was me and my friends going out drinking and they just Venmo me the bar tab? Like,
yeah. So, receipts are going to be important.
oh, damn. Okay.
If you pay with your card, making sure that, if it's paid out of your personal account, then you can say like, no, this is paid out of my personal account. This is my business account. This is my personal account. This is what happened. You saw we were at the bar. I didn't drink $200 worth of liquor. It was, like there's some rationality with the IRS.
Are
Like,
you sure? Are you sure that
yeah.
you didn't drink 200?
Yeah. Like there's some rationality.
Okay.
The IRS
champagne
agents,
flutes, and that's 200.
Yeah, they're people just like you and I. They're just trying to make sure that they dot their I's and cross their T's as well.
Yeah. I can dig it, man.
Yeah. One last thing before I wrap up. I looked at the time, and I can't believe we've been on this long. I will say, the filing deadlines this year for individuals, the filing deadline is April 18th this year. Most people are thinking, April 15th. They're used to the April 15th date. This year for 2022, you have an extra 3 days. So you have until April 18th to file your tax return and or file an extension. So if you file an extension, the due date for those extended tax returns is October 15th, 2022. I always tell people an extension to file is not an extension to pay. So payments that you owe, if you owe the IRS, payments are still due by April 18th. So, if you think you're going to owe, it's best that you at least get it filed or get it prepared, so kind of what you're looking at, and you can settle that payment. You may not have to file that payment. You can extend to file the actual tax return, but you need to make the payment by April 18th. Okay. Or else you're going to start incurring late payment penalties or late filing penalties, and then interest. Yeah. So yeah, that's what I have.
Up, AC, man. Once again, appreciate you, man. You're a wealth of knowledge. Like I said, you helped me tremendously last year when, like I said, was start my business and understanding some of the nuances of filing taxes and owning a business and how it relates to your personal taxes as well. Before we let you go, shoot out your socials. How can people contact you if they want to, sign on, become a client and have their taxes prepared by a professional versus some of the software accounts and stuff out there?
Sure, yeah. I'm on IG. I'm AC the CPA, AC as in cat, the THE, CPA, Chris Paul Aaron. All right. AC the CPA is my IG handle. You can reach us via email at info@thejohnlgroup.com, info@thejohnlgroup.com. You can like our Facebook page at John L Financial Services. The John L Group is actually a suite of business units. One is a logistics company, but then we have John L Financial Services. So that's what we operate out of, John L Financial Services. Licensed CPAs and accountants will be here to assist you. like I said, you can reach us out. You can reach me directly on IG at AC the CPA.
All right, my man. I'll be reaching out to you because I still got to get my stuff together, but it's been a task, man. Process of moving, man. And I haven't really had a chance to just sit down, but I got to do that either this week or next. And I'll be in contact with you. Once again, thanks for joining us. Thanks to listeners for checking in. Hops and Stocks, episode 28, signing off.
Thank you.
Shell of a man if we ever depart from my heart to I'm riding with you. I'm riding with